Welcome back everyone to another video. As you can see the title of the video, I am going to simplify the idea of buy side and sell side liquidity. There are a lot of misconceptions which are around in the market. There are a lot of information which is way too much and way too much complicated in terms of understanding and in terms of execution as well on the charts. So I will be simplifying this in a way which I have learned, right? And you're gonna find it really efficient and helpful. But before I move forward, I want to make an announcement that I am organizing a private group where I will be sharing my trade ideas. You're gonna trade with me, and my training materials and everything, which will be posted in that particular group. To enroll in that group, all you have to do is just register with the link in the description. Link in the description. Forward me the screenshot of the registration, right, on Telegram. I'll share my Telegram as well, my ID, and once the registration is verified and confirmed, I'm going to instruct you further, and I'll let you know how you can utilize, and I'll guide you how to be profitable and how you can understand the market through my lens and my perspective. All right, so once this announcement is done, let us move along with the market. Let me tell you what is a buy side or a sell side liquidity. Any high or low above or below, now this is important, above or below current price equal to what? Buy side or sell side liquidity. This is the actual example which, if you would have went through Trader Day's mentorship, you will understand that this is the only proper definition of what's a buy side liquidity and sell side liquidity is. So if you understand, any high or low above or below current price, this is the term, current price, is equal to buy side or sell side liquidity. Meaning what? This is the daily time frame, okay, and this is the current price right now, right? A new year has started. So first of all, happy new year to everyone. New year has started, a new quarter has started, but this is the current price, okay? I'm using Ovanda. Let me go to forex.com. Right here, what do you see which is obvious apart from the thing which I have highlighted? This high is the all-time high, October 31st. This time is the low of November 14th, right? And currently price is in between this range. And now I'm only talking about gold, right? Not talking about silver or anything else. If you would see, everything, the price, it's fractal in its nature of delivering how it wants to deliver and how it wants to consolidate. Suppose once this range was done, this range was formed. So this was the high and then this was the low. As you can see, both the highs and the lows have been taken, right? We have this high and this low. Now both of them are intact right now. So the direct buy side or sell side liquidity for us would be this high and this low. Now if I'll go a little bit for move my time frame, this is still intact for us, but what's the current high and current low above and below the current price? And for me to tell you, what's a swing high and a swing low, right? So let me correct myself. Is this low higher than this low? Yes, it is. this low is higher than this low, this candle right here. What's a swing high? You know, for your, this is a very basic, I know this is really basic, but a swing high is a candle which has a candle, a swing, a low, a higher low, sorry, a lower high left to it and a lower high right to it. That candle, right, that wick or that candle forms a swing high. Opposite is a swing low. It has a higher low on the left and a higher low on the right. That candle is the swing low. If you would know, if you calculate these candles, right, these three, this is not a swing low, this candle right here. Instead, this is a swing low, right, and this one is a swing low. And price being fractal, right, you'll see all of these just playing out. So every time the chart and the market, it creates a swing high or a swing low, price tends to gravitate towards those highs or lows, right? It will deliver, or it will create a scenario in such a way that price is going to be gravitated and attracted towards that particular high or low. Now if I'll go on the daily time frame, here the time comes. Our year started 2nd of Jan, right? If I look back, let me just clear out everything. Okay, once again we are back into what? If I look back 20 bars, this is 20, 40 and 60. What are the major highs and lows? It's the same ones. 60 days major high, 60 days major low. Now this low was already taken, so where do we focus? This low. This high was already taken. You can see price delivered higher, wicked above, right? This is gold. It wicked above and then delivered lower, but did not go below the 40 days low. So this low is intact, but this high ran through, so our eyes go to this high. Now if you want to wait for a higher probability trade setup, a high probability, I'm not talking about any trade setup which gives you 1 or 2, 1:1 or 1:2. You can find it every single day, but if you're waiting for a high probability trade setup, I would suggest that you wait for, I'm talking about position traders, okay? After the 30th of Jan, new price action will emerge, and of course January being the second least probability month, you will see the trade setups forming, but you will not see them to be high probability. They will be very low probability. Why? Because of it being the first quarter of the first quarter of the year, first month, first quarter of the year, right? And there is something called as defining range, which I do not want to speak in this video, but these are the things which I want to make sure of that you understand. So look back 20 days, this high, this low, right? Not just this low as well. So if dollar keeps going higher, right, up until there is a possibility that dollar might drop a little bit up until Donald Trump takes his oath. So we might see price going higher, clearing out these highs, all right, creating SMT with silver, and right when we reach up to this point, we might have a failure swing, or we might have a higher high, and the price might come back to take out these lows, and then it depends on the conditions at that time to to gauge the market. But gold being a safe haven to major investors, right? You can see the price action of gold since all the way back. It has been on the rise ever since. Now this is a monthly time frame. What have I told you all before? How to look at the monthly time frame. Same thing. Previous month high is a buy side liquidity. Previous month's low is the sell side liquidity. It all have to be viewed under the lens of open, high, low, and close. What do you see here? Failure swing, so the high, failure swing, right? For price to go high, where it has to be first? It has to take a low, a major low, and then deliver higher. As you can see currently on a monthly fair value gap, price is reacting and rejecting this one particular place, right? And we have clear trend line liquidity, failure swings right above, right? But all these things which I'm saying, does it correspond with silver? Let me go on a weekly time frame. We have this high right here, right? Swing high. Price, you can see, is being choppy. Why? Because of the time. It's the time which is hindering price from delivering either higher or lower, right? It's generating interest, more orders being filled left and right. If you're a major investor, you'll be like, okay, I want to buy once price comes to this level. So you've already left your order open, and you have your sell order here, right? Breakout traders. Or maybe you want to buy once the gold reaches up high here. These are all orders which are typically, that's how they are placed. Like the algorithm seeks them, and it does not look back so much. It just looks at these things majorly 60 days, and it's gonna clear out the liquidities left and right. If it sees a high which has to be closed or purged, it will do it and then drop back down into its original direction. Or then if it breaches these lows, it's gonna go on the opposite direction, right? Let's go on silver. Make sure you guys understand this one SMT right here. This is a major SMT which caused the price to drop. If you do not know, you have to go back and look at my videos. Okay. Now, in terms of Ipda, okay, I'll directly take back 60 days, right? Now this SMT right here, you can go back to your charts and verify this is the SMT. This high and this low right here. Now this is the, I guess, 20 days back, right? But when we saw on gold, price is much higher in terms of the 20 days low, but on silver price is much closer. So what do you think is going to make a turtle soup? Which pair is, this is getting interesting, guys. Which pair you think is going to make the turtle soup, and then which one is not? This is a key level right there. Okay, one price, one asset is trading around here, while another asset, same correlated pair is trading around here, close to the key level. What's the key level here? The 20 days back, look back, low, major low. Which one of these do you think is going to make a turtle soup, and which one of these is going to make a failure swing? Obviously this one. It's obvious, right? Trend line, same concept, but in the light of what? Smart money, ICT, quarterly theory, whatever. But logically speaking, this is gold and this is silver, the currency of God, dhahab wal fidda. If you did not understand Arabic, those were the two words for gold and silver. And then you can pair this one with dollar index or copper, anything which you want to pair it with. But then this is how it works. On gold, you can see price is currently trading much higher from this low, while silver is much closer to this low, right? And these are far from its reach, and we just wait for sequential SMT or SMT at the lows, and then we look for our entries right there. So this is the buy side and this is the sell side. Currently, if you'll see on the current price, if I'll go look for on a 1 hour time frame, where do you see current price? The high and the low available is this one, and then not this one, either this or this. These are much better targets actually to look for. Why? Because these are relatively equal lows, right? So if you would see ICT's mentorship or Trader Dice or Romeo's mentorship, you will witness the fact that they target and they prime all the students to target these liquidity runs. Why? Because it's easier to achieve for price. For the algorithm, it's easier to target these things, right? So this was it. This was a naked chart explanation of what to look for, right? I did not just actually give you the buy side liquidity, sell side liquidity concept. I actually gave you the whole idea of what's gold and silver is going to do. So take the information, use it how you want it, and remember the announcement which I made in the beginning, right? I'll see you on the other side, and good luck, good trading for the next week.